Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us the 16th of January 2015. We are never short of news and never short of activity in the markets. This morning, futures are lower by 5.5 handles at 1983.50 after a wild and volatile day yesterday. Continuation of volatility this morning. We have crude oil higher by just about 50 cents, now at $47.25. We'll get into the technicals of those in just a few minutes with Milton. This is a day after oil had one of the most volatile gyrations in recent memory. We had near a 10% move in oil yesterday. Rather impressive, and that's something that we are keeping a very close eye on. The 10-year at 1.746, well below that 2%. Also, the 5-year at 1.210%. Remember, we are about 41 basis points, about 44 basis points lower on that 5-year than we were about a few weeks ago. Remember, we went up to about 1.662, if memory serves me right. Lower on that 30-year, folks, we're at 2.383. These are some impressive moves, specifically in treasuries. And the thought process is that amongst traders, amongst analysts, is that it's the work of the Swiss National Bank forcing the issue of possible QE in the European Union there. Also forcing a lot of investors, clients to really pile into the U.S. dollar and enabling a bigger dollar gain amongst other currencies. We have also, so the dollar at 92.541, higher by 0.195. Remember, if you look at the charts, years back we went as high as 92.63, and that you'd have to go on a weekly basis. The euro lower by 0.0033, still in that 115 handle at 1.1589. So again, volatility to continue for the foreseeable future, and we'll get into some of the themes that we're watching this morning as well. Let's take a brief look at yesterday's activity. The reason we do that, it's very important to understand sentiment and where that takes us on a day-to-day basis. Yesterday's Dow Jones Industrial Average lower by 0.61% at 17,320.71. S&P 500 lower by 0.92% at 1,992.67. Nasdaq lower by 1.48 at 4,570.82. Clearly, we had a extremely volatile morning with the Swiss announcements. We'll get into a little bit more of some thoughts on that in a moment. So volatile morning and really continued downward pressure for the rest of the trading day. Again, coming into this morning, S&P futures are lower by a little bit more than 5 handles at 1983.75. So really the big story here, folks, outside of any exogenous events on the geopolitical front, is continuing continuation of some themes here that are just not going away here, folks. And if themes are not going away, or perception of importance of something is not going away, we're going to continue with volatility. And as long as we have a difference of opinion amongst analysts, amongst institutional traders, where the dollar should be, where the euro should be, where oil should be, we'll have continued volatility, continued difference of opinion. So clearly a few themes here that are recurring on a daily basis, and this is something we're watching rather closely. So we have the euro weakness, dollar strength play there. This will continue as we are preparing for the January 22nd ECB meeting, and we'll skip to the second to the last part as we're talking about the euro weakness here, and that is the Swiss National Bank. So let's bring this down to a layman comprehension here. When you have, what's been happening was the Swiss National Bank basically had a cap of 1.20 euros for the Swiss franc, right? So when they removed that cap, they allowed the Swiss franc to increase in value. With the cap in place, what was the Swiss National Bank doing? They were basically printing Swiss francs and purchasing the euro. So that basically provided a bid for the euro and provided a cap for the Swiss franc. Removing that cap basically removed a floor for the euro. Why? The thought process is that with the ECB potentially introducing quantitative easing, they're going to lower the value of the euro anyway. So why not go with that thought process? So that's, a very basic explanation there. So that's why we are seeing this very significant move in the euro within the last 2 days. Euro currently at 1.1584. And continuing that weakness. Certainly oil, there was a glimmer of hope perhaps yesterday for oil to perhaps begin to make some kind of base, if you will, for a rebound. At least yesterday that was quickly rebuffed. Remember, oil does also react to a decrease in the value of the dollar. We did have a short time before the market opened here in the U.S. that the dollar was weaker based on that Swiss announcement, and so we did have a bit of a pop in crude oil, but as the dollar adjusted, we did have a lower oil coming in as well. Continued conversation, certainly we mentioned the QE. We'll see what happens on January 22nd. Conversation of deflation or disinflation or lower inflation expectations certainly are a part of the lexicon. Will Greece exit the euro? That's still polls are still being taken in Greece, and as we see that, we will report on that. Additionally, the rates, folks, the treasuries have just been falling as of late, and this is as the U.S. treasuries remain to be if you will, a bastion of security. As price increases, it's an inverse relationship to the yield. So if prices increase, people are buying treasuries, yield will decrease. So we're seeing a rate decrease in treasuries across the board from the 5, 10, and 30-year especially within the last few days to a week or so. We've discussed the Swiss National Bank reduction of interest rates. Also today, just to, if we didn't have enough volatility, we also have option expirations today, so that will absolutely add to how folks perceive option trades. So a word of caution as we're monitoring these particular option trades. It is option expiration, so it does add to volatility, and we'll continue to report on that as we're seeing that. So we wanted to bring this up again just as a recap. Swiss National Bank ending minimum exchange rate, specifically with the euro. They removed the cap of $1.20. They did reduce interest rates on deposits, and commentary that they're basically preparing for the government bond purchases by the ECB, whereby they would this would decrease the value of the euro. So one of the things that's been happening, overnight into this morning, we have several firms that are basically defunct. With what's happening, declaring insolvencies, various information coming out with respect to accounts being absolutely decimated with the SNB move, with the Swiss National Bank move. So that is a story that is developing, and as we hear more, we'll certainly report on that. And that is, we feel that this is just the beginning in terms of reverberations in the larger markets, and as we see whether it's accounts being demolished, various interactive brokers reporting as well that accounts are severely lost value. So again, it's a developing story, and as we hear more information, we'll certainly report on that. We wanted to certainly, we are keeping an eye on oil prices. They're continuing to be in these levels, below this 50 level, and if as we've been saying, we will see a response one way or another, perhaps from OPEC in the future, but also we saw yesterday that both Russia and Venezuela want to have a joint announcement, certainly to do something with oil, and that's something we'll keep an eye on. Nothing substantial that we're coming out of the Russian-Ukraine situation, but again, as we mentioned yesterday, this is something that the markets have more or less internalized and quantified at this point, barring any exogenous events or any cataclysmic events. Certainly we had consumer price index this morning. We'll get into that in just a moment. Industrial production is coming out in just a few minutes here. Once that comes out, we'll get that out to you. 9:55 is the Reuters University of Michigan sentiment report. 4 o'clock is the Treasury International Capital. And also, we did have a continued decline in this Baltic Dry Index, down by 1.1% to 741 points. So this is something that we watch on a daily basis, and we recommend that you do as well, at least from keeping an eye on where the economic activity takes place, as it does tend to be a leading indicator of it's a very real-time indicator of shipments, specifically on grains, raw materials, and this is something that's reported on a daily basis. So on the CPI, we had CPI month-over-month December numbers lower by 0.40. It is what was expected. Prior was negative 0.3. We have the core PPI flat. versus the expected 0.10. Prior was 0.10. Core CPI year over year as decreased to 1.60 versus the 1.70 prior was 1.70. Remember, the objective of central bankers is to have inflation at 2%. It's necessary for prices, and if they see a continued but measured increase in prices, it's actually a good thing. And the concern is that if oil is a big part of that, and if it's not increasing in value, clearly it hasn't. It contributes to the CPI and PPI, and this is something that we've talked about in recent weeks. And this is something that the Fed keeps an eye on rather closely. Also, we do have Kocher Lakota speaking this morning. Should there be any significant commentary coming out from that speech, we'll certainly report on that, and what we look for is any comments on monetary policy, interest rate, and perhaps any commentary on what the Swiss National Bank did, any commentary on quantitative easing from the European Union. We do have industrial production this morning, lower by 0.1%. Expected was negative 0.1%, so in line with expectations. Previous was 1.3%. This is numbers for December. Again, month over month, industrial production negative 0.1%, in line with expectations. Previous was 1.3%. We have the futures currently just about where they were when we began the program. We have so yeah, just relatively in that same area, down 5.25 handles at 1984 even. Also, we have capacity utilization rate for December was 79.70, bit below that 80% mark. On estimated prior was 80.10. Remember, if industrial capacity utilization decreases even slightly, it doesn't indicate room for inflation. So there's that's something that, again, the Fed watches rather closely in terms of bottlenecks. They want to see pricing, capacity utilization increase for increases of rates. And this is something even going back to Greenspan time that he used to watch capacity utilization rather closely. So that's, again, an interesting number to watch. So let's take a look at overnights, and then we'll get into the technicals of the day into the morning. So in overnight trading, we had Asia, Nikkei lower by 1.43%, Hang Seng lower by 1.02%, Shanghai higher by 1.20. In Europe, we have FTSE more or less on the flat area, higher by 0.07%. DAX in Germany also near the flat mark, lower by 0.04%. CAC in Paris higher by 0.14%, and the IBEX in Spain lower by 0.18%. So what we'd like to do is get into the technicals. Milt, certainly a lot happening this morning. Take us through, if you would. If we could get into the CL first. I mentioned that because I thought we had one of the most violent moves in oil yesterday we've seen in a really long time. Can we get into that first? What's your thought on that? Did the Bulls, well, clearly, in my opinion, the Bulls didn't win yesterday, right? They had an opportunity to create a base. They didn't. What's your thought on that, specifically in oil first?
Well, oil clearly they didn't. The Bulls didn't win. Anyone could see that. They had a huge reversal from highs of like 51.70 to the 47 level. So it was a complete bear disaster, bear victory on that one. I don't know what the feel is on oil, but currently it's 47.35 up 62 cents. It's it's what it is. The funny thing is, it broke a downtrend yesterday. With the trading yesterday, it broke a downtrend. Currently, the previous low of 44.20 right now needs to stabilize, or it will be a continuation downtrend, and then I guarantee we'll see the upper 30s, because similar thing happened last time when oil broke the 50 handle downtrend, went down to 46. This time we're at the 44.20 level. If that breaks again, I easily think we can see the upper 30s. So right now we're watching the oil levels, we're watching the volatility, we're watching the volume. Huge volume yesterday, huge volume on reversals, and which was not good for a bullish view. So we're watching oil. We're watching the current levels in oil are. We're looking at intraday level type wise. We're looking at the support level here at 47, with the upside resistance at 48. That has been the key number lately. 48, 48. It's always 48. So we're gonna keep an eye on those levels. Keep an eye on the upper and lower side, and watching that 44.20. Not today. God forbid it happens today, but while watching that 44.20 number for a downside continuation downtrend, which could bring us to the 30 handles. On the ES, let's jump on that. The futures are down about 6 handles right now. You've been having, in my opinion, some negative earnings across the board. 5 out of 5 financials down. You had Intel yesterday with weak guidance. Schlumberger, everything has been so far a weak earnings season. We're keeping an eye on the markets, keeping an eye on earnings, seeing the reaction towards trading. The ES right now is down 6 handles. The support levels we're watching on intraday levels are 1985 to 1990 on the upside resistance, 2000 ideal level, downside support at 1970, 1975. We're watching those, watching everything on that side. On the gold, we're watching the 1250 number was broken to the upside. Resistance, we're watching at that 1300 level, keeping an eye on that resistance level to right now. Watching those, watching the volume, watching that 1250 handle if it's broken to the up or downside, keeping a close eye on everything. And if anything on that side happens, we will clearly let you guys know. The VIX broke above resistance. Today's key level on the VIX. You want to see strength and continuation to the upside. You don't want to see a breakdown back below the 2021 currently support levels. So we're watching the VIX, seeing how that trades today. You have a 3-day weekend. You have U.S. markets are closed on Monday. You have a 3-day weekend. You have option expirations today. It's going to be a volatile day. It's going to be an interesting day. We'll see what happens. We'll see the ideal tradings on everything today. The currencies are the clear plays of what's going on. Euros at low again, the dollar at highs. Firms across the board got decimated on the S&P shock moment yesterday. Be careful out there, trade with caution. As of now, wait till you see some type of reversal before you jump into strong names. But the volatility is definitely there. You're seeing a lot of volume. You're seeing a lot of movements. Keep a close eye on your positions, and good luck out there. George?
Thanks, Milt. So clearly, as we've been saying, the consensus is that volatility will continue into the day. Certainly from yesterday's Swiss National Bank announcement. And should we hear more information on specific firms' accounts, I think this is just the beginning. When you have such violent moves in currencies, it certainly creates an interesting dynamic for everyone, not just the larger investor, but everyone who's involved on down to equities and derivatives. So it clearly has an effect on overall trading and perception. So let's dive into for your benefit here. We've included the ETFs and ETNs that track oil and oil names. This is something that we feel is important to monitor at the very least, to understand the correlation between individual entities such as oil names, ETFs, ETNs, and actual and the actual future, the actual oil, West Texas Intermediate crude. And again, we've been commenting on this and impact on producers. We have yet to see the full the opinions run the full gamut in terms of where folks think individual companies will be, individual countries will be in the near future, even with oil being so low. And also, as we've been saying, the impact on CPI and PPI data, we've seen this lower oil price certainly has an effect on both consumer price index and the producer price index. This is globally, actually, not just in the U.S. So let's take a look at where we are on commodities, energy, and raw materials. We have crude oil higher by 58 cents at $47.27. On the distillate side, gasoline we have higher by 0.0261 at 1.3264. Natural gas lower by 0.131 at 3.02. We did have a little bit of a pop in natural gas yesterday, back down to that $3 level at $3.027. On heating oil, we're higher by 0.0242 at 1.6475. Gold still above that 1250 that we mentioned yesterday, higher by $1.60 at $1,266.60. We also have silver continuing its increase here, higher than broke through that 16 level. Now it's above the 17 level, higher by about 3.8 cents at $17.14. We have platinum lower by 20 cents at $1,262.90. On the rates, as we've been indicating and reporting on, the 5-year 1.226, 10-year 1.766, and the 30-year 1.402. A bit of an improvement in rates as of since the beginning of the program. We'll take a look at the yield curve quickly, and certainly we do see a flatter yield curve that's developing over the last few weeks. We've been talking about this for quite some time, and finally we had some other analysts, whether through TV and various other sources, that were commenting that they are beginning to see a flatter yield curve, which typically means it would be a counterintuitive for it to see an expansion, a large expansion, if we continue to see a flattening yield curve in the treasuries. So again, keeping a very very close eye on that. Dollar continuing its decline. Actually, a little bit of a recent pop here in the dollar, 92.755 here, folks. This is higher than we'll even pull up the chart here, taking a look at the dollar. One moment as we get this chart up. We're going back to, we'll take a look at the 10-year and weekly on the U.S. dollar specifically, and that particular high was 92.63, so we are above that. So we're at clearly a decade high U.S. dollar level. This is the DXY index versus 10 other currencies. Also, with respect to currencies, we're getting indication that FXCM is halted, and that's something that we'll continue to monitor as things develop on the currency front. On the euro, you see at the bottom of your screen there, currently at 1.554. So just off that early morning low, just a few minutes ago. So continue to monitor that as well. Let's get into specific securities that we're seeing being circulated around desks this morning. Let's see here. Let's dive into top insider transactions that we are seeing this morning. FUND, we had a little bit more of than a $250,000 purchase by a vice president. FUND currently at, let's see here, bear with us one moment, let me get that. Currently indicating yesterday's close at $7.09. OVAS, we had a $1.7 million purchase by a director, and we have the open in New York. So this morning, OVAS indicating at $47.70. GPC, Genuine Parts, currently is indicating $95.22. We did have a late date spike up to $98.08 in Genuine Parts. We had a $476,000 purchase by the CEO. ETE, Energy Transfer Equity, currently indicating at $51.19. Moving on here, we had BH, so we had some rather large insider purchases this morning. So Big Laurie Holdings currently indicating $413.51. SCCO, bear with us one moment. SCCO, Southern Copper, we have currently indicating $25.97, a $1.4 million purchase there, and also we had continuation on this OPK, where we have the CEO purchases another $439,000 worth of stock, currently at $9.95. On the syndicate side, we had a mixed shelf by ESV, currently at $27.99, up about 1.23%. SGNL, Signal Genetics, we had sells up to 8.6 million shares dollars worth of common stock, waiting on SGNL. ABY, currently at $31.63, priced at 9.2 million shares secondary at $31. That stock is higher by about 0.5% this morning. TERP, TERP, we had a pricing 12 million share common stock at $29.33. TERP currently at $29.80, higher by 1.6% this in very early trading. QADB, priced 3 million shares of common stock at $20 and waiting on that. So let's get into yesterday we like to fish out stocks that perhaps mentioned by popular folks, pundits, and so forth. So Kramer mentioning positive mentions on CCS, Lennar, FRO, NSC, and MBLY. And we'll take a look at those stocks this morning. Waiting for our feed there. And also he cautiously positive on Target, and Target this morning at $75.50 in very early trading. We did have just want to mention something. Certainly, as Milton brought up, banks are reporting lower trading revenues. This is clear across the board from B of A, Bank of America, Chase, J.P. Morgan Chase, Goldman Sachs. So very interesting dynamics taking place there. We'll continue to see how the rest of earnings season continues. Also, ORMP, Oramed Pharmaceutical, granted patent in Israel for oral administration of GLP-1. ORMP currently at $4.70, higher by about 4%. And we neglected to mention GS, Goldman Sachs, currently at $177.40. So, folks, certainly lots happening this morning. As we finish up here, we'll take a look at where we are in futures. Futures currently flat now. Remember, we were down about 5 handles, currently at 1989.75. Crude oil higher by 91 cents now at 47.66. And we have the 10-year 1.761. 30-year again below that 2.4 level. And a larger story here, folks, are the currencies. This is going to continue to influence the markets. The DXY, the dollar index, 92.700, and the euro at 1.1556, lower by 0.0066. So again, keeping an eye on that. And this is something, it should prove to be a rather interesting and volatile day today. So this has been Unusual Activity, powered by FinancialJuice.com, with George Avedon and Milton Marmonides. We wish you a great day, good hunting, and have a wonderful weekend. We'll see you folks on Tuesday. Have a great weekend.